I'm here in Munich with Harald Wilhelm, the Chief Financial Officer at Airbus Group. We've just had presented a very strong set of 2014 financial results, revenue growth, profit growth, both strong. Harald, can you tell us a little bit about the longer-term outlook? I know in 2015 you're expecting a slight growth in profitability because you've got a big ramp-up year in the A320 program and the A350 program. What's the trend after that?
Yeah, 2014 we kept harvest the hard work of several years in the profits, underlying as well as net income, as well as free cash flow. We'll carry on that, certainly. 2015 slight growth, which we project. But look into 2017 and beyond. So we just announced today the rate increase on the single aisle to rate 50. We clearly see potential even above that. And take as well the currency situation, the strong dollar in these days, which obviously is helpful for us. If you take that for 17, 18 and beyond, there is clearly a case for very strong EPS growth to come. So that's what we're driving hard.
Good. Okay, earnings per share growth. You're also in a situation where you're very strong, and this has been consistent for several years now, very strong in cash, and you anticipate good cash generation coming in 2015 again. All these factors, and a very strong aerospace industry environment. As Tom Enders said earlier, really it would take the world to come tumbling down for the very positive outlook to change much. Do you expect, and you've outlined your dividends growth plan, which is substantial, but do you actually expect investors to call for some more dramatic dividend activity?
First, for 2014, we propose, the board of directors proposes to the general meeting a dividend up by 60% to 120 a share, which is, I think, a very decent increase. We've been going through years of big investments, and we're still in the phase where we invest into the ramp-up of our programs. But that level of, say, investment is coming down. At the same time, we're also divesting part of the businesses, so the Dassault share, parts of the defense and space business. That's why we're looking in 2015 into capital allocation again. But first we have to execute that in terms of the divestment, but then certainly we'll talk about it again.
Okay. Last point on cash. One of the interesting things to be raised today was that the airline finance market for new airliners going to your customers is actually very strong. The commercial market is stepping in and financing those aircraft. Investors are looking for the kind of returns that they can get by financing aircraft, which is taking a demand off of Airbus's own customer financing activities. Would you expect, however, that you may see in the supply chain, as you try to ramp up your output levels, some scope to help finance the investment at that level in bringing the programs through?
You're absolutely right. I mean, the appetite in terms of assets as aircraft as assets being a good investment is phenomenal, and it also demonstrates the trust of the capital markets into our products. Turning to the supplier financing side, this is basically not our job. I think here are programs in place. I mean, take the QE program in Europe. Certainly, when we are in discussion with suppliers, I mean, but chiefly that's their responsibility to drive their operations, to generate enough cash flow to fund the step up in the working capital as well as in the investment. What we can offer is a very long-term visibility thanks to our backlog. So therefore, I think there is really a strong case for our suppliers to do their investments on their balance sheet.
So you would expect the capital markets to also respond positively at the supply chain level?
Absolutely. I think, I mean, the market is there. We are there to facilitate, but we are not there to fund or finance the supply chain.
Right, okay. Thank you very much. Harald Wilhelm, thank you very much. This is Dan Thisdell for Flightglobal with Airbus in Munich.